Abhishek, everybody has their sources right now and trying to read reports and figure out what's going on with Saudi production. What are you hearing?
So I think there has been a lot of knee-jerk reactions since the weekend, as we've seen already in the press. When we did our own analysis at JP Morgan, we put out a report out early on Monday. We had three scenarios where we had one in which 50% is cut off for 1 week, second in which 50% of oil from Saudi Arabia is cut off for 30 days, and the third most worst case scenario where it was cut off for 90 days. In those three scenarios, the base case was production cut off for 1 month, basically, in which the risk premium coming purely from fundamentals was around $7 to $8. And then in addition to that, positioning-based risk premium was another $7 to $10. So we are looking at $15 impact if oil was going to be off for at least a month, and that $15 would have been seen in October. But in one of the low-case risk scenario, which is where we just considered 1 week of cutoff, and that's what you perhaps markets currently seem to be reacting right now to, risk premium was just around $6. So which is what I think currently markets seem to be reacting on today's news. I think this is a news which is evolving, and based on our knowledge, the type of damage that we have seen in Saudi Arabia over the weekend, that does take long to recover. You do have wells shut down, especially in some of the fields such as Gawar field in Saudi Arabia as well, because of the impact in upkeep. And these wells to come online, especially if they are, let's say, more gas or NGLs based, it just takes time to restart them. Whereas if they were just purely oil, they will restart immediately. So I think we have to take it with a little bit of a pinch of salt here, and also try and wait for the full assessment from Saudi Aramco in terms of what the full damage is. But based on what evidence we have, I think it's going to take a little bit longer than perhaps the knee-jerk reaction now that we are seeing again today in the market.
Tamar, what's your view? And what's a little bit longer than consensus expectations right now?
Well, I think that the satellite images show that there were really extensive damage, and this is very sophisticated, customized equipment, so I don't think that that gets replaced so quickly. Saudi and inventory that they have domestically and inventories that they hold internationally can easily cover their export requirements for about 30 days. But if we're talking about an outage beyond that, that in of itself should add at least a $10 premium to the price of oil.
Tamar, we had Harold Hamm on a few moments ago. He thinks that this risk premium of 10 to 15 is embedded and is not going away because the Middle East is, I don't know, is it getting more dangerous? I mean, it's been a hotbed for decades, but is there something about these drones that is uncovering some kind of strategic liability with these facilities?
I think so. I don't think that market analysts had really been appreciating the degree to which these assets are vulnerable. We know that Saudi Arabia has been investing billions in defense of these assets. We've always known that Abqaiq is the most important oil asset on the planet, but we thought that it was well defended, but not against these unconventional weapons. So I think that we should have at least a $3 to $5 risk premium embedded into the price going forward, regardless of how long it takes to get the production fully operational, and regardless of what the ultimate play out is here, whether it's diplomatic or military, because we now have assets that are really exposed that the market wasn't appreciating up until this weekend.
Yeah, Abhishek, how do you think about what the market is factoring in or betting on in terms of what the response from Saudi Arabia will be?
Well, yes, in terms of the geopolitics, when it comes to production itself, we were looking at the real response time of 1 week in terms of 1/3 returning and then rest coming out in 1 month. Today, I think, based on the news that is coming out of in the press from Aramco, that they can return production quite substantially in 2 to 3 weeks. In terms of geopolitics response, if you were to say, how does Saudi Arabia in the region now respond to potentially what was a threat over the weekend from Iran, I think that's something that this market definitely was not pricing in earlier. There was only investor malaise at that point because of global economy faltering and demand for oil being really weak. What this event has shown that geopolitical risk premiums concerning Saudi Arabia, and not just Strait of Hormuz, now within Saudi Arabia and related to the region, needs to be embedded, at least for the time being in the near term, of the order of $5 to $8. I don't believe all of that is right now, at least as of today, is being embedded, given that we have reacted to the Saudi news in terms of quick return of oil.